Morning, Steve Freed with the morning grain comments. Mixed trade overnight with beans, corn higher while wheat's lower. Outside markets, stocks are trying to rebound after all the recent losses. The dollar's lower and crude's trying to be a little bit higher also. I think in the grain markets, there was a lot of discussion overnight about the USDA numbers and what they could change to down the road. The biggest surprise was in the wheat when they lowered U.S. wheat crop more than people had anticipated. So I think in general, people are thinking that the wheat yield could still go down with some dryness in the southern plains and continued wet weather in the hard red spring areas. We could see also increase in demand. USDA is probably 20 million metric tons too high in the export numbers out of the Black Sea. That's 735 million bushels of wheat that needs to find a home, and the U.S. carryout is 619. So some people are looking for a much higher wheat futures price and a higher on-farm price also. And the market also is going to be watching buyers. I mean, freight rates are going up. Dollars at 20-year highs, and if higher wheat prices move higher, then that spells problems for the world buyers who are uncovered July forward. U.S. bakers also have very little coverage for third and fourth quarter. Over in the corn, the big surprise was the 177 corn yield. That's still equal to last year's record, and some people question that, given the fact that we could see a little bit lower acres because of the late plantings, and the yield could still go down if we have a dry summer. In the corn market, again, you're looking at USDA being pretty optimistic about South America corn exports and also Ukraine exports. And you take that out of the situation, you probably have closer to a 1240 US 21-22 carryout, and maybe as low as 750 for 22-23. And so that tightens things up and suggests that corn prices right now are not rationing demand. Certainly the funds shifted their net buying to the east from the July after the lower yield number. But I think that if we do see 200 million bushels more export demand in this year's marketing year, we could see the July gain a little bit on the December. As far as the bean market is concerned, I mean, they did lower the carryout 25 million bushels due to higher exports. They raised next year's crush 40 million, which is a new record high, and export 60 million bushels, but still have a carryout of 310. Some people could see the carryout this year closer to 170 and next year 100. USDA's got Argentina next year's crop up 9 million tons, Brazil's up 24 million tons, and they raised China imports to 99 million tons. So again, soybean market might be a little undervalued. They did raise the crush for more biodiesel domestic use, which raised the meal ending stocks. There's a rumor floating around that the Chinese Congress may not extend Xi's term for a third time, which is offering some uncertainty in a lot of markets. So we'll just see how money flows. I think the markets are still undervalued depending upon weather, and we'll see how it goes from there.